Hello, welcome back again. One of our subscribers of the channel actually asked to make a video about Alibaba's balance sheet and talk about it a little bit. Some fear actually crept in his mind and he was like, okay, maybe Alibaba's balance sheet is not very good. Maybe they are losing money, maybe they are losing assets, what's going on there? So let's take a little bit of a look. And this is what I'm going to be doing in this video. But I completely understand people who are holding Alibaba and maybe, they are getting a little bit scared. It's very easy to get scared when the stock market actually rewards Alibaba with lower prices every day. It can happen, and the thing that you need to remember is that a stock price doesn't necessarily reflect, most of the times actually doesn't reflect actual business, especially if we're looking at a downtrend or an uptrend. This works both ways. There are two separate things. It's the business and the stock. And the stock is something that's basically supposedly relies on the business, but there is also, and there's a very big chunk of it, traders, investors, and people pretty much, and psychology. And this is what's getting traded right now. It's the news that are getting traded around the market. And this is why you're looking at pretty much every Chinese stock going down. Does this mean that Alibaba is actually worth 25% in the last 14 days? Because it was 120 in April 4th. That's 2 weeks ago. Did the company actually lose 25% of its actual value? Of course not. Not even close. What is happening here is sentiment. Sentiment gets affected and people are willing to sell. And this is where I'm willing to buy. This is why I did a lot of buying for Alibaba. I'm not buying more right now because I'm pretty much maxed out and I don't want to be exceeding my threshold for any company, really, regardless of the risk. But I don't think that Alibaba has a lot of risk and I think that it has a lot of upside. So if I wasn't holding it, I would definitely be buying here, no doubt. So what's going on here with the company and its balance sheet is what we're going to be examining. We have already taken a look at the financials in multiple videos. These are pretty stellar here. And even the outstanding shares, which was a little bit of a burden here, the company has announced buybacks. And so this is going to be getting reduced. So we're getting an extra here, another plus sign. And the P ratio is slightly elevated, but I don't care about it. It's the price to free cash flow that's much better and makes more sense for me. And it should for you as well. Let's take a look at the balance sheet now. This is the thing that our subscriber asked to take a look at. And I'm going to take a look at the annual one and also the quarterly one because I want to take a look at the most recent data as well. Now, these values are already automatically converted to dollars. So what you're seeing here is not one. They are reporting in one, but the tool automatically converts to the currency, to the dollar, basically to dollars. Using actually the converting using the currency ratio that was used back in that year. So this is using $1 and $2 ratio in 2017. This is in 2020. So it's basically converted to what this amount was back then. Very important. And it's automatically done by the tool. And what is going on here with the company? Let's take a look at the total current assets. 26 billion here, 27 almost, 26.5, 40 here again, 65, 97. What are the total current assets? Now, current assets, when we're talking about current assets, we're talking about all these assets that the company is holding that are cash equivalents that can actually be liquidated very quickly, short-term assets. Like, for example, cash is a short-term asset because it can be used, it can be liquidated immediately. For instance, short-term bonds could be a current asset. It's an asset that you can actually liquidate very quickly if you want to. Things of that sort. As you see here, inventory is another one. So some short-term investments are also other short-term investments. So as you see here, the company is actually increasing their total current assets 4 times. From 26 billion to 100 almost. This is a 4-time, it has increased, they have increased the total current assets by 400% in the 5 years pretty much. That's amazing. That's awesome. What about the non-current assets and what are these ones? The non-current assets are basically the assets that cannot be easily liquidated in the next 12 months. So for instance, property, plant and equipment, it's not easy to sell that immediately. Goodwill, intangible assets. Now, I don't pay too much attention to goodwill and intangible assets, but they are assets of the company. And long-term investments as well. If you are holding bonds that are like 15-year bonds or 20-year bonds or so, these are not very easy to liquidate. You can lose money in the process. So these are non-current assets. And again, the company having 47 billion back in 2017 and now having 159 billion. This is a more than 3 times increase from 2017, again, for the non-current assets of the company. Let's take a look at the liabilities, because the companies also have liabilities. Companies have liabilities as well. And liabilities are things that the company owes. This could be account payables, short-term debt, and things of that sort. Now here you will notice that, of course, total current liabilities also get increased. This makes a ton of sense. As the company's operations get increased and the company makes more money and more assets, they will be having more liabilities. It's the same with every household, right? Same thing. If you're buying a car, you are increasing your assets, then you have more expenses as well, so more liabilities. So the total current liabilities are the ones that need to be fulfilled very quickly. That is in the next 12 months. What is that? This is 57 billion here. Now, picture this thing. The current liabilities of the company are 57 billion, are the ones that need to be paid quickly. 57 billion here. Now, what about the total non-current liabilities? These are 36 billion here. Again, these are the ones that are more long-term. Now, if we take a look at the total liabilities that the company has, that is everything. Every liability that the company has is 93 billion, right? Now, let's take a look at how much cash flow the company is making. Cash flow is operating cash flow minus capital expenditures. It's basically the cash from operating activities minus the expenditures that the company has for everyday operations, pretty much. So let's take a look at the free cash flow that the company has here. That is for 2021 alone. Let's just take a look at that. This is 28.7 billion here. And if you take a look back at our company, at our stock analysis tool here, you have a very, very handy number that you can take a look at. 3.26. What does that mean? This is the free cash flow of last year we just examined. When you divide it to total liabilities, how many years it will take us, how many years of last year's free cash flow to pay all the total liabilities that the company has. Anything below 5 here is stellar, because this means that the company can pretty much just write a check for all the total liabilities that they have and basically have no debt. Of course, they're not going to do that because that would be terrible for the company to just spend all that money up front. It's a terrible idea. But it gives you an idea of how solvent the company is, how great of a balance sheet that they have. And this is why it's important to actually use these metrics and actually understand what they are. They are all about the company's operations. Let's go back at the balance sheet here. Now you will see here, again, the total equity of the company, 164 billion. It used to be 46. That's what, 4 times as much, right? So the company has increased their total equity, again, 4 times from 2017. Now, 2017, the company had 46 billion in their balance sheet, right? Now they have 4 times as much. So what was the stock price back in 2017, right? It would only make sense to be 1/4 of what it is now, wouldn't it? They have 4 times less equity than 2021. That's equity for stockholders. So it should be traded 4 times less than today. Let's take a look. What was happening in 2017? So if we go back to our charts and we take a look at the 5-year chart here, you'll see 2017 is here. The company was 113. Over here, the company was 181. And over here, beginning of 2018, the company was near 200, 184. Back then, the company had 1/4 of its assets that it has today. So what do you think about the balance sheet? You are examining the actual financials, the numbers, and we're seeing what the company was doing back then. So you can understand why the company's stock price right now is extremely undervalued. The company's stock is very, very undervalued, and this is why I love Alibaba right now for a long play, for a long-term investment. And I hope this kind of gives you an idea, and thank you for suggesting this kind of video. I think this was very interesting to make, and can be a very, very nice addition for people who are looking to find more information and discover what's going on with Alibaba. But it's only about numbers. I never pay much attention again to what's happening in the markets, because the markets can be rational, can be irrational. It's irrelevant. This is just the vehicle here. It's not the company. And so the company itself is what we examined now. And so you make your own deductions out of what I showed here. Do you think the company should be trading higher or lower? Based on what you have seen from the balance sheet is exactly what we have examined here. And again, I have to thank you for suggesting this very, very nice topic. I think this is a very, very cool idea to just examine the balance sheet and actually compare it to what the company has been doing in the past. I think that's very, very beneficial for stockholders and people who are willing to learn more about Alibaba. So thanks again for the suggestion. I hope this video was helpful to you and pretty much everybody who is watching here. And thank you for watching thus far. Please remember to like the video. That really helps the channel grow and helps me make more videos for you guys. And remember to subscribe as well, because next week actually I'm opening up this tool for for subscribers, for viewers, and eventually Patreons, and I will let you know how to get access to it. So you may want to be around for when that happens and hit that notification bell to get the notification first. And thanks for watching this one again, and in the meantime take a look at this video that I made earlier. And in this one I'm discussing Twitter and what's going on with Elon Musk. Thanks for watching this one again, and I'll see you soon. Bye bye.